Hello everybody. Been a minute since I've done a video. Sorry, I've been just crazy busy. Um, as I'm trying to wrap up the last of my construction contracts over the next 4 or 5 weeks, I find myself with work to do in 100 plus degree heat index. So on top of everything else, I'm doing that now as well. So been a little bit slow. But things should pick back up in September for me. August itself is going to be a pretty rough month. But I got a post from one of you actually on the public forum, and it was a question about, or actually it was a mention of this, and what this is essentially could be a potential box trade. And while I do agree with this, there's a couple things that I wanted to kind of bring to your attention that I saw in this chart that makes me a little leery of this. Now, let's go ahead and take a look at a little bit wider look at it. And in some ways, you could really say that the box is something like this. Now, granted, it's a pretty big box to trade, but you could also call that a box. But what he was saying is that we're forming this box, and it looks like two areas that we could spend some time in between, and we have spent some time in between. And I agree with that part of it wholeheartedly. And in fact, we've been there since June, say 29th, June 30th, and so we've been there a month. But when I look at this, even though I see the trends with us, and I do like the idea of shorting this at this area, there is something that really disturbs me, and I posted this in the public forum as well. But quite frankly, I think it's easier to learn or to understand something if there's an actual video and audio part of it. There are two things that concern me about this. Number one, this low is much higher than that low there. Now, I see that it's happened a couple times before and it's fallen, but it just makes me a little bit leery. What I have discovered is when we trade boxes, I'll go ahead and draw it here. And a lot of times what you'll get is you'll get some type of move like this. And as you're going along, pinging back and forth, eventually something like that happens. You don't quite make it to the other side, and that's always the first warning sign. Now, what I've noticed though is most of the time that is a continuation of the trend. This would basically be your midline for those of you who do box trading. You understand what I'm talking about. And a lot of times you'll see that. And that is the case in this one. That is the midline. So that's another thing that kind of worries me. Also, on top of that, this bar here from yesterday is a hammer. It's not placed in the right way. I understand that. But it still means that they tried to push it down and they got rejected. So truthfully, it would not surprise me to see this pair rise up. And this is by the way, I didn't even say which one it was. It is the pound CAD pair. So it's not exactly the most liquid of pairs. Anyways, it's certainly tradable. Don't get me wrong. I'm not trying to say that you can't trade it. But when I see this, I look at this and I think, okay, I mean, I can see where he's going with this. And to be honest with you, I'm not totally against it, but there are those couple things that make me nervous. This is exactly the type of trade, though, that has gotten me into trouble in the past. And then further compounding it, you can almost make a case for a bit of a sloppy W pattern, which of course if we raise the value of the currency pair up to say maybe 155.35, we're gone. We're taking off in theory. So let's take a look at what we might do with something like this. Well, you can see that the box that I have drawn is about 200 pips. Yes, I realize, you can make an argument for it to be from there to there, but the meat of it is basically 200 pips. So what that gives me is 200 pips. So from the breakout 155, that would put us at 157 roughly. And as I look at this, I can see that there is definitely some support and resistance areas right around 157. So what I would rather do with this is wait to see if price makes it to 157 if it breaks out. If it breaks down, I miss the trade, and that's fine. You guys all know that it happens from time to time. But if we get a pop up to 157, there is some precedent there for a bit of resistance. And on top of that, just eyeballing it, I'm curious to see where it is from the last drop down. and 157 is right around the 50%. So I have a lot of different reasons to maybe let this go and try to short it up there. Plus, you have to keep in mind, if I do get a chance to short it down there, it's still a 200 pip possibility, just like it is here. And since it's with the trend, we could be talking closer to 4 or even lower. Maybe it goes lower. Who knows? Another thing that you can do is you can try to put in a moving average and see what it tells you. The moving average is right above 157. We could have a very quick. I mean, this pair does move. We could be there in 2 days, real quickly. So we could be testing the 200-day moving average. You guys know I don't trade moving averages, but I am aware of the fact that the 200 is something that's used by a lot of institutional traders, just basically because they're stock traders too, I guess. 100 is already dipping below. That's fine. I suppose we could see a little bit of a failure to even reach 157. It might, get caught up in there, but the whole idea is there are several different reasons that I look at this and I think I don't want to go counter trend. I just, and to be honest with you, here recently I haven't been taking counter trend trades at all, and I have to admit it's made quite a bit of difference. Because I found that even the trades that aren't as good fundamentally and as sound as the other ones still eventually tend to go in my way, in my favor anyways. It's not to say I don't take any losses, of course I do, but going with the trend definitely makes your life a lot easier. So this to me looks like it wants to be a self-fulfilling prophecy that this W or this box or rectangle or whatever you want to call it looks like it could get another 200 pips, which, like I said, that's right at the 50. So I'm very interested in shorting it there. So it is definitely a doable trade. We just need to see if it's going to do that. And like I said, with this hammer and the fact that the lows aren't as low, if it falls, I'm willing to live with the fact that I didn't take this setup, because to me up here, especially if we get something like a shooting star or a pin bar or whatever, at 157 at the 50% retrace, that to me is a much more safer trade. So I hope that made sense. I mean, most of you guys probably understand all this anyways, but this is a good example of the more you look at a pair, the more you look at a setup, I should say, the more likely you are to kind of pick different things out. So, in review, we have the 50% fib is right there. We also have the 200 somewhere just a little bit above it. So the 200, especially if we get up there fairly quick, is going to be floating around just above it as well. And then, of course, we've got support and resistance. So I could find 3 reasons to sell this right at that level. And, of course, if you get the bar that you're looking for, that's a beautiful thing. With here, I agree. Support resistance is there. But like I said, I can find a couple bars, a low that didn't make it, and a hammer yesterday that just makes me a little bit edgy as far as shorting this. And I have found, on top of everything else, when you do go with the trend, which that would be with the trend, don't get me wrong, but I see the support there, it helps with your nerves too. It's much more calming, because when you look at the market and you zoom way out, you can say, well, the trend's obviously down, even though we bounced there. I mean, the trend is down. We fell. We bounced pretty hard, and then we fell again. And in fact, if we break below here, that is a little bit of an end pattern. You could be talking 700 pips or whatever below the 153 range. So that's my spiel on this this setup. I thought it was a very interesting chart that he brought to my attention, and I just wanted to show him the other side of that trade, and hopefully between the public forum and this video, he got at least what I was getting at, and hopefully you guys got something out of it too. Now, having said this, we'll probably get up in the morning and we'll probably be down here at 153. But like I said, I'm willing to let it go. I'm okay with missing that trade just because I had a couple reasons not to be in it. Okay, guys, thanks.